to the max. Okay, that's where you get to enjoy our products and services to the max. So in the absence of no further question, uh, let's dive right into what we have today. Okay, so today we'll be talking about how to trade a ranging market. Okay, how to trade a ranging market. Has anybody have heard of what a ranging market is before? If you've heard of what a ranging market is before, type yes in the chat box. If you haven't, type no. Okay, let's do that real quick, real quick. If you've heard of what a ranging market is before, type yes in the chat box. If you haven't, type no in the chat box. Okay, so I'll just start with myself. I'll type a yes in the chat box. Okay, Lillian said she's heard of what a ranging market is. Awudu says he's heard of what a ranging market is. Okay, anybody else? Anybody else? Anybody else? Let's keep it coming. Let's keep it coming. Ichena says he's heard of what a ranging market is. Okay. Okay, so we are on the upside. A lot of yeses and just one no. Don't worry, we'll get it all sorted out. Okay. Now, can someone tell me what a ranging market is? Anybody? In your own, there's no need for you to go to Google. Okay, just in your own way, your own thoughts. What do you understand a ranging market to be? What do you understand the ranging markets to be? Okay, I can see a lot of people typing. Yes, yes, let's get it. Let's get it. Okay, it's when the market is moving in a horizontal line, neither bullish nor bearish. Brilliant. Very, very brilliant. Markets trading within a support and resistance for a long period of time. That's amazing, Lillian and Chidubim. That's amazing. Anybody else? Anybody else? Anybody else with the idea of what a ranging market is? Anybody else with an idea of what a ranging market is? Okay, Uchenna's typing. It's the trend of a particular. No, it's not. It's a trend. Okay, I think I have to differentiate this. Okay, I have to differentiate this before I continue. I can see Sawyer is typing. Okay. Um, let's dive right into what okay a situation where price doesn't go to a particular direction. Okay, just trading within a certain level. Brilliant. Now, okay, let's dive right into it. Trading in a ranging market can be tough. Can be very very tough because you don't know the direction in which the price will go to. Okay, there's no clear trend to jump on. It can be hard to pinpoint when to enter and exit the market. Markets, okay, there's a rule or there's a theory which states that 90% of the time the market is in a range, and I'll prove it to you on the chart. Okay, I'll prove it to you on the chart. Okay, the markets are often moving sideways, and traders can do a lot of damage to their trading account in such environments. When the market is moving sideways, you can do a lot of damage to your trading account in such environment because you don't know if to buy or sell. Rather, you are term biased. That means you are just glued to one particular bias, and if it goes against you, you end up losing money. Now, this is especially true of traders that learn to trade in bull markets when the price is constantly going up. I learned how to trade in a bull market, so it was tough for me. It was tough for me learning how to trade in a ranging market because price was only going up. Or let me put it this way, I learned how to trade in a trending market. When price was just going up and just going, I just have to buy or sell and I'll make money. It was until the ranging market situation came, I knew it was not easy to capitalize on every move in the market. But truth be told, after I learned how to make money from trading the ranging markets, I understood that you can make any money in any situation the market is. And there are, however, a lot of ways to profit from trading in a ranging market, and I'll be going over it in the coming pages. Okay, but let me quickly show you something. Based on this, markets are often moving sideways. Let me show you something. Okay, I'll quickly show you something. Let me share my screen. Trying to share a Chrome tab. Okay, so I'll quickly show you a WTI chart. Okay, can you see my screen? If you can see my chart, please raise up your hand. Okay, if you can see my chart, please raise up your hand real quick, or just say yes in the chat box. Okay, great. Now, let me show you something why I said, or why the theory is correct, that the market is always ranging. You will agree with me, okay? I'm not telling you it's compulsory, you have to agree, but just look at this. What is the direction of this market? Can someone tell me what the direction of this market is? Can someone tell me what the direction of this market is? Is it up or down? Is it bullish or bearish? Bullish, brilliant, very, very bullish. Now, but would you believe me if I told you that this market is bullish, but it is basically in a range every single time? Would you believe me if I told you that this market is bullish, but it is basically in a range every single time? I know you would say no, but let me prove it to you. After a bullish impulsive leg, price is always caught up in a range. After a bullish impulsive leg, price is always caught up in a range. So for price to move in a trend, it has to break out of a range, then retest that range before trading higher. Every single time price moves impulsively, be it big or small, price is in a range. Let me just click on this button that allows me to photocopy this or copy this to be precise. After every single impulse, price moves in a range. After every single impulse, price moves in a range. So do you believe me, or do you agree with me whenever you hear the word price is always in a range, no matter what? Like price is always in a range more often. Do you believe me now? Just from what I just showed you, do you believe me that price is always in a range more often? Do you believe me? Yes or no? Quick yes or no. Do you believe, or do you agree now? Brilliant, brilliant. I'm glad I could create clarity on this. Great, great stuff right there. Okay, so let's go back to my screen. Now that we've gotten that sorted out, okay, now that we've gotten this sorted out, let's see the next thing on the slide. Now let's understand what a range-bound market is, or a range market, or a ranging market. You can call it a range market, a ranging market, or a range-bound market. There's a lot of names, but as long as you hear the word range, understand that its direction, it's not clear. It's neither going up nor down. It's just trading within two certain prices. Okay, two certain prices. Now, a range-bound market is one in which price bounces between a specific high price and a low price. Okay, a specific high price and a low price. It is just basically the opposite of a trending market. It's just a life example of this explanation is very simple. But let's end this. I'll use a life example to explain. A high price acts as a major resistance level in which price can't seem to break through. Likewise, the low price acts as a major support level in which price can't seem to break as well. The market movements in a ranging market are classified as horizontal, ranging, or sideways. It can also be called or also known as choppy markets. In a ranging market, there is no clear direction. Price just fluctuates and trade within a very narrow range. A very good example of this. Now, I'll be using the most popular path of Lagos. Okay, let's use Ikeja to Iyanokwaja. Okay, Ikeja to Iyanokwaja. If there is a wall at Ikeja bus stop and cars can't go through, if there is another wall at Iyanokwaja and cars can't go through, what will happen? The cars will just move from Iyanokwaja to Ikeja, Iyanokwaja to Ikeja every single day, right? Do you agree with me, right? Do you agree with me on that? That if there's a wall at Ikeja and there's a wall at Iyanokwaja, cars will only travel from Iyanokwaja to Ikeja every single day and nothing more. What do you call that? Can we call that a range? Yes or no? Can we call that a range? Yeah. Brilliant. So that is just a very, very good life example of what a range is. Or, for instance, I'm enclosed in a room. I can't move beyond the four walls of the room. Can I say that I am in a range? Can I say that I am in a range? Moving between 2 points. Moving between 2 points and never beyond those points. Can I say that I'm in a range? Great, great. I'm glad you all understand. I'm glad these life examples are actually creating clarity, like creating clarity. Okay, so in a ranging market, there is no exactly over exactly. In a ranging market, there is no clear direction at all. Now, let's go to the different type of range, different types of ranging markets. Not all ranging markets are the same. Okay, um, there are different types of ranging markets. We have the perfect ranging market. We have the ranging within a pattern and the ranging without a pattern. The perfect range is when price doesn't trade above A and B, or above or below A and B. Point A is the beginning of the slide, okay? Is the left hand side of this slide. Point B is the right hand side of this slide. Price never goes above or below. It just moves from A to B, A to B, A to B every single time. That is a perfect range. A range with a pattern. Let me go to the charts and show you an example of a range with a pattern. Okay, so first off, let me show you an example of a perfect range. This is a perfect range right here. If we go to the 1 hour, let's go to the 1 hour. Let's go and look for this. I hope I'll be able to go as far back as yes. Yes. Okay. Yeah. So this is a perfect range. This is a perfect range. Right here. Price doesn't trade above 59, 53.9 and below 51. Do you see right there? Price doesn't trade above or below it during this period of time. But in the end, price broke out and started going up. Now, this is not a perfect range because at some point in time, price went out of the range but still came back into the range. Oh, you can't see my charts. Very, very sorry. Very, very sorry. We'll share my screen again. Can you see it now? Can you see it now? Can you see my charts right now? It's already loaded on my screen. Okay, I'd like to get more yes, actually. I'd like to get more yes. Okay, great. Now, I said this is a perfect range because during this period in time, price didn't go beyond 54 and did not go below 51. This is 54 here. This is 51. Price took to the normal model of trading four higher, four lower, four higher, four lower. Do we get? Do we get? Do we understand? that this one is a perfect range, doesn't go higher or go lower. Okay, so the next one is trading within a pattern or trading with a pattern. Trading with a pattern means price moves and creates a pattern within that range. Now, this is a very, very good example. In this example, we can see price creating a high, then a lower high, sorry, a lower low, then a lower high, then a lower low. We can see price going up, creating a low, then a higher low, and a higher high. A higher high and a higher low. A higher high and a higher low. A higher high and a higher low. Then a higher high that now broke out of the range, but price still ended up coming back before trading away. That is when price trades in a range with a certain pattern, okay, with a pattern. Now, a range without a pattern. Let me show you a range without a pattern. These types of range, this can be considered a range also. This type of range is a range without a pattern. Let me see if I have a tool that can mark it out. Okay, let's just use this. This type of range is a range without a pattern. See how choppy it is, how uncertain it is. Do we all see it? Do we all see it? How uncertain the range is. So that is a range without a pattern. Price ranging without a pattern. Now, let's go to the next thing on the next slide. How do you trade a range-bound Forex market? Okay, how do you trade a range-bound Forex market? I'm going to share with you every single thing I use in trading a range-bound market. Now, the main characteristic of a range-bound market is the tendencies of price to reverse back at its equilibrium point or to break out and reverse totally. Okay, so sometimes the reversal happens at equilibrium and sometimes the reversal happens after a breakout. Okay, this is actually very, very straightforward theory. Very, very straightforward theory. And I will not lie to you, it has been implemented multiple times in the Forex market before I decided to fine-tune my own. Okay, it's a theory everybody knows, but okay, I decided to fine-tune my own and call it things I like. So everything I'm saying here are words I coined by myself. Okay, it is based on the relation between current price of a particular part and the average price. Now, how do you trade a range-bound market? Number one, understand. If you go online, they will say understand PPP, price projection process. But I don't want anybody to understand PPP because of it's difficult to understand PPP. So I want you to understand a theory I call CP, controlled price. Okay, now let me tell you something very, very simple something. The government controls the price of crude oil, right? They determine this is what the price should be and this is what the price should be. They determine this is what the price should be and this is what the price should be, right? That is the theory of control price. Being able to understand this is the price of a certain financial instrument. Let me show you an example on the charts. Let's go to, can someone give me any financial instrument? Any financial instrument at all? Let's use it as our example. Anybody at all? Let me show you what I term controlled price theory. Crude oil. Okay, we've been using crude oil since US oil. That's it's called US oil. Gold. Okay, let's use gold. XAUUSD. Actually, I have a bit of markup on gold, but I'll just clear it since it's of no use. Okay, so let's use this area right here. Now, or let's use this area. Yes, this area is one that I would really like to talk about. Let's box it up. Okay, great. Now, what is controlled price? Controlled price is basically saying you must not go from A, sorry, you must not go beyond A to B. You must not go beyond these two levels. That's controlled price. That means it's basically saying the Minister of Agriculture just comes out today and say beans should not be sold for 100,000 naira. A bag of beans should be sold within the range of 25,000 to 27,000. Everybody knows this is now the new price. Okay? Everybody knows this is now the new price. If you call your own 30,000, will people purchase from you? Will people purchase from you if you say your own is 30,000? Brilliant. That means everybody will be looking for a bag of beans within these two price range. That means people will be trading a bag of beans within these two price range. And this is just what it means. People will be trading gold from this low price to this high price. They will not trade gold beyond this price at this moment in time. Do you understand? Do you understand the concept of controlled price now? Do you understand the concept of controlled price now? Before I proceed. Brilliant. Okay, brilliant. Now, the next thing is identify the right pair and time. So our pair is gold. Okay, our pair is gold. When I talk about time, I'm talking about sessions in the market. I'm talking about sessions in the market, such as the New York session, the London session, the Asian session. Okay, identify the right time to capitalize on it. Okay, now you've understood the concept of CP, controlled price. We've identified that we'll be using gold as our example. Let's leave the time aspect out of it because we don't know which time we'll be trading it yet. Okay, now the third thing is find a range bound market in daily time frame. Okay, this is the range bound market. This is the daily time frame, right? We are on 1 day. Okay, and this is the range bound market. Okay, we've been able to identify that. The next thing is set levels and trade entries. Where do you want to buy gold from? Now this is the question. Where do you want to buy gold from? Do you want to buy gold when it is at the top? I'm coming, let me share my screen. Do you want to buy gold when it's at the top? Do you want to buy gold whenever price comes here? Or you want to buy gold whenever price comes here? Which one do you want to do? Since you understand the concept of controlled price, it is just saying this is 25,000 naira for a beans, and this is 27,000. Where do you want to buy gold? Do you want to buy gold at 25 or buy gold at 27? Let me get a response in the chat box. Let me get a response in the chat box. Are we all following? I just dropped a poll right now. Let's respond to it. Because the energy is running low. The energy is running low from you guys. Okay? Are we all following? Let's respond to the poll. Let's respond to the poll. Exactly. You want to buy gold at 25. Okay? That is the concept behind setting levels and trade entries. Okay? You want to buy gold at 25. Where do you want to sell gold? Where do you want to sell gold? Where do you want to sell gold at 25 again? Exactly, you want to sell gold at 27. This is just the simple thing I used to say, which is buy low, sell high. You are buying when it is low in a ranging market. You are selling when it is high. Now, to the last thing on the list, which is target the midpoint of the range. Target the midpoint of the range. If you are buying low or if you are selling high, make sure where you'll be taking your profit from is at the midpoint of the range. I think this is the midpoint of the range. Um, this is the midpoint of the range at the top. Yes, where this line is the midpoint of the. So if you are buying here, tendencies of you making profits is here, because tendencies of price reacting at the midpoint is high. So if your take profit is at the midpoint, you have a higher chance of profiting off that trade. Oh, sorry, very, very sorry. I said this line I just put in here gives you a higher chance of making profit, which is basically the fact that the midpoint of a controlled price is where magic happens or where things happen. Things such as possibly a reversal or a rejection, something will happen at the midpoint. And you are better off taking your profits at the midpoint than waiting for it to get to the top. Now, let me show you something real quick. Look at what happened close to the midpoint here. Price came back like as if it was going down, right? And look at what happened when it was relatively close to the midpoint. It went all the way up. Okay, right here, this is the midpoint. Right here. This line I just touched. Let me make it tick. Can you see the midpoint now? This is the midpoint right here. Can you see it now? I use the line to mark it out, okay? So that midpoint is where you want to take profits from. That means if you buy low, if you buy here, you want to take profits here. If you sell here, you want to take profits here. Do you understand now? Exactly, you set your TP at the midpoint. You set your take profits at the midpoint. So do you see how everything adds up? You've understood the control price theory. You've identified the pair and time. You've decided or you found the range bound on the daily time frame. You set your levels, your midpoints, your trade entry. You've understood you buy low, you sell high. You know where your target is. It's at the midpoint. Do you now see how easy it is to trade in a range bound market? Yes or no? Do you find trading in a range bound market easy now from everything I just explained? I'd like to get more response. I'd like to get more response. Okay. So we've even went ahead to the charts to see how to trade the range market. But can someone give us another pair again? Let's check. Let's check. Can someone give us another pair again? Let's check how to trade the range market. You don't control price is a theory, like I said. Okay, control price is a theory where you basically just understand where and where is price trading within. Let me show you gold chart again. So it's just hypothetical. I used 25 and 27. You know, gold is trading within 25 and 27. That is just the controlled price. They should not sell below 25. They should not buy above 27. Lillian, do you understand now? That is just the theory behind control price. Understanding, nobody tells you who is controlling the price or anything. You just have to look at it and see it yourself. Okay, let's check GBP JPY. Okay, some brilliant piece of price action on GBP JPY. Okay, but not so brilliant. Let's go back and see if we can get a proper range. Okay, we have a range here. We pick everything here. Um, okay, yeah, and we have a range here also. Okay, so first off, I'm going to call Lillian. Where is the midpoint? Okay, just tell me. My line 2 is here. Is this the midpoint? Is that the midpoint? Is this the midpoint? Is this the midpoint? Okay, let's see. Is this the midpoint? Um, is this the midpoint now? Okay, great. Now we've gotten the midpoint. OV, is this the midpoint? That's the midpoint. Okay. Chidubem, we chose GBP JPY. Can you tell me from what you see right here, this price right here, what is the control price? Round the number up and tell me what the control price is. Is the control price 130, 150? Is that the control price? Is the control price 130, 150? Is the control price 130, 150? Lillian, is the anybody at all? What is the control price? Is the control price 130, 150? Okay, you can't see the figure well. Okay, we have the figure of the lower part is 140.915, and we have the top price as 144.586. So what is the control price? Okay, 140. Okay, I'll take that. 140, 140. Great, great, great. I'll choose that as my control price for the lower part. So let's round it up. 140. Let's round the values up. Okay, can you see the coordinates now? Okay, I think this works fine. 140. Okay, can you see the coordinates on the screen? So what is the upper part? The upper part of GBP JPY. What's the control price above? Let's round it up. Let's round it up. Should I write 145 or 1? Okay, great. 145 then. 145 it is. So we all agree that this is our control price, right? We all agree that this is our control price. Okay, so if this is our control price, I would have to adjust the midpoint a bit. Okay, great. Now, let's just pick this area right here as 141. 141. So that's what it should be. 141. Okay, so what will I be doing? I'll be looking for buys below, right? And I'll be looking for sells above, right? I'll be looking for buys below and I'll be looking for sells above. Is that correct? Great, great, very, very brilliant. For this part also, what would I be doing? I'll be looking for buys right here and I'll be looking for sells right here, right? So basically, this is how you just trade control price. This is how you trade a ranging market. It's not difficult at all. Is it difficult? Is it difficult? Very, very easy to trade. Very, very easy. And that's why all you need to do after this webinar is go back and practice these things. Practice these things. Go back and practice these things. Go back after this webinar, go to the chat, see these things play out so you can have a proper idea of how it would happen in real time. Going back to see it is not about you reminiscing on how you missed the move, how you could have capitalized on it. What it basically does for you is helping you understand your anticipatory skills, how you should anticipate it in the future if it happens, and how you can make money off it. That is the whole idea behind going back and seeing these things happen. So I just sent out a poll right now. Do you find value in the things we've been talking about so far? Just be honest. Can't click on it. Be honest. Yes or no. So the three takeaways when it comes to trading a ranging markets are: number one, support and resistance level are useful to mark out before trading in the ranging market, which is basically your control price, higher price and lower price is basically support and resistance. Your CP, control price, higher value and lower value is your support and resistance. They are useful because that is where you'll be buying and you'll be selling from. Also, if you are trading the ranging market, don't be subscribed to everything I say, okay? You can incorporate more strategies into it. You can add channel patterns, you can add Bollinger Band, anything you feel will be right, will be better for you when you will be trading controlled price, when you'll be trading a ranging market. The last but not the least, look into different currency pair, different markets. That's how you find good trade opportunity. You have to look at all other pairs, okay? You have to look at all other pairs if you'll be trading a ranging market, because all the pairs can't range at a time, okay? You have to go and sort for the ones that are ranging and trade them, okay? So this brings us to the end of today's webinar. Thank you very much for joining me. I'm your host, Akinwale Chibuike.